What's up everyone? Thank you so much for tuning in, and if you are new, welcome to my channel. Here I try to cover topics that are of interest to you on real estate and mortgages. So please make sure to like, share and tap that bell icon so you get notified anytime I share an informative video. And of course, if you find the information provided is of value, then all I ask is to hit the tiny little subscription button to get me motivated to keep you up to date with everything real estate. Hi, my name is Preeti and I am both a real estate broker and a mortgage broker for close to 20 years. Today, I'm here to talk about RRSPs. Now, the basic definition is simple. An RRSP, known as a Registered Retirement Saving Plan, is a savings plan registered with the Canadian federal government that you can contribute for your retirement purposes. When you contribute money to an RRSP, your funds are tax advantaged, meaning that you're exempt from being taxed in the year you make that contribution. In simple terms, it can be deducted on your current year's tax return, potentially reducing the total amount of taxes you pay. Now, even though there is no age limit to when you can open an RRSP account, it's advisable to wait till you're 18 years of age or the year you get your first job. Also, you have to be a Canadian resident, you have to have earned income or currently earning an income, and file your tax return. Those are the basic rules, but this scheme has its advantages and its disadvantages. So first, let's dive into what an RRSP really entails. RRSP was first introduced in 1957, basically to promote savings for retirement by employees and self-employed people. The idea was purely to help people save for their retirement. According to the rules, a maximum of 18% of your gross income can be put into the RRSP annually, up to $29,210 as of 2022, and that keeps increasing every year. So let's say you earn $100,000 per year, then the maximum contribution will be $18,000. Now, the company has already deducted your taxes for the year for the $100,000 income. But since you contributed $18,000 towards your RRSP, the income that CRA will consider for you will be $82,000, and you stand a chance to get a refund back. Now, these are just numbers for the basic understanding of an RRSP, but always talk to your accountant because there are a lot of permutation and combinations involved. And if I sit to explain them, well, I'm trying to keep it simple, right? Now, that being said, let's talk of advantage number one. As previously mentioned, you save money on taxes. Plus, if you have unused RRSP contribution room, that can be carried forward from year to year. Therefore, your RRSP limit is adjusted annually based on changes to your income and the accumulated of unused contribution room. Always check your most recent notice of assessment from Canada Revenue Agency to get the exact limit you have or the contribution room you have available to you. The second advantage is the money that you earn in an RRSP is also tax-free. So let's say you open an RRSP account and you decide to be adventurous and you go and you invest the money through your RRSP into the stock market or cryptocurrencies. I mean, that's the in thing nowadays, right? The interest you earn on that is also considered tax-free as compared to the money you put in a locked-in GIC or a regular savings account where you pay taxes on the interest that you have earned. So that's very good, right? Yes and no. What happens to your money if the stock market crashes? Your original investment into the RRSP is gone. Now, there are no tax advantages or tax implications if you stand to lose that money. But if you have taken a loan and then put that loan into your RRSP to fill up your contribution room and the money is lost, the loan you have taken still has to be paid in full. You cannot get away by saying, well, I put the money in RRSP and now it's gone, so I don't know what to do. So be careful where you invest your money. Always talk to a banker before opening an RRSP account and be aware of all the options you have. Lastly, you can use your RRSP as a first-time home buyer, and I'll explain that very soon. Now, let's talk of the disadvantages. Unlike a regular saving account, once the money is put into an RRSP, you cannot take it out as and when you feel. It's locked in, period. This, to a lot of people, is a major disadvantage. But remember, this money is meant for your retirement, so technically you cannot take it out till you retire. But life happens, and it's happening to everyone nowadays. And there may come a time when you have no choice but to break the RRSP. And in some scenarios, you pay taxes, and some you can get away with it, but only for a short period of time. So let's say that you put your RRSP and it's not locked in. It cannot be in a locked in plan. And you want to take the money out for your own personal use. then that amount gets added back as the income for that year and you pay taxes on it. It is the only time you do not get away with that. But there are scenarios where you can take the funds out of the RRSP and not pay any taxes. The first-time home buyers, they have the advantage. They can take out a max of $35,000 each with no tax implications as long as they pay it back within 15 years. And every year you pay that back, you must tell your accountant that this is the money that's going back to the home buyer's plan. Don't make the mistake I did. When I bought my very first home, I used some money from my RRSP and I paid it back within 3 years. But I did not notify CRA when I did my taxes for those years that this money is going back into my home buyer's plan. And I got dinged. So be aware and be prudent in handling your RRSP account. Now, you can also use your RRSP as a first-time home buyer after you have sold your principal home and you've been renting for 4 years and you're buying your property in the 5th year. But there is a caveat. If you have taken money under the first-time home buyers program for any previous property, that amount has to be paid off in its totality. You cannot have an HBP balance and also claim it under the new property. Now remember, these properties I'm talking about can only be your principal home. If you are taking money out of your investment property, then you will be taxed on it. Now, why did I put the home buyer's plan as a disadvantage? See, with the way the market is today, the cost of living, the fact that our salaries are not at par with our expenses, first-time home buyers will put money into the RRSP, but they can only take out a max of $35,000. So if you have been contributing to your RRSP and you have, let's say, $50,000 or $60,000 sitting there, too bad, so sad, because you can only take out $35,000. So, my dear first-time home buyers, please, you must contribute towards your RRSP. You can save money on your taxes, but remember, you can only pull out $35,000. So once that's done, move to another avenue of saving. And I promise you, I will be doing another video on this very soon too. Or better yet, call me and I'll guide you on what you must do to better prepare yourself when it comes to these kind of savings. Now, there is a lot at stake when it comes to the RRSP, and that is why I have broken this video down in 2 sections. Next week, I will cover all the different factors that are very important to keep in mind when getting an RRSP and maintaining that RRSP. Till then, you take care. So, if you found value or you like this video and would like to see more content, please click on the boxes on the screen. Once again, my name is Preeti Rao. My contact information is in the description box below. Make sure to hit like, share, subscribe, and that tiny bell icon so you don't miss any future videos. Thank you so much for watching, and don't forget to call me because I hold the key that opens the door to your dream home.